This is the Headshot Happy Hour podcast. I'm your host, Shondell Thomas. I'm sitting here today with Jaron Brown and Beth Roberts. They are wealth builders and financial educators on a mission to um, helping families and individuals, recognize the potential in investing and how to get out the rat race. How are you ladies doing today?
I'm good, Shondell. How are you?
Awesome, awesome. Thank you so much for joining me and coming on the platform to help strengthen the community and in their knowledge of financial independence.
Thank you for having us.
For sure. So, what is it that you all do? And I'll let either one of you. We'll just get right into it. I'll let either one of you start.
What I like to tell people what I do is I teach people how money works, how to grow money, and how to never lose money.
Mm, that's
Absolutely.
the key, ain't it?
It sure is. It sure is. Um, Empowering people with the knowledge of finance is paramount. Um, 91% of our population across the board in America have been denied crucial information. They've been underserved in finance. What's even more insulting is that only 9% of us are licensed and educated to teach.
Mm-hmm.
In schools, we have educators, teachers who can teach economics, they can teach accounting, but by law, they can't teach this if they're not licensed. People
Mm,
can have full degrees in accounting or financial type of um, in various spheres, but still not have a clue on, as Jaron said, how money works, how to avoid taxes, how to have wealth, tax-free wealth and growth.
mm-hmm.
So before we even allow anyone to acquire any of our services, we educate them first. They have to know what they have. They have to even know what they need. And to give clarification, insurance, for
Okay.
instance,
Okay.
many people have policies, buy policies, have no idea what they have, what they need, or what they don't. And
Mm-hmm.
so we can even evaluate those policies and make it clear to them, and then further put them in a better position to grow money in these policies.
Got you. So, what would be the first step into consulting with a person on what they need? What are
Well,
some of the prereqs?
the first thing is we teach them the three rules of money. And the three rules of money is the first is understanding how compound interest works. Too often in
Mm,
our community, we pay compound interest, but we don't earn it. The second rule is how to protect their income, right? And we protect it from taxes. So helping them understand I, uh, IRS codes, helping them
mhm,
understand how to, within the law, lawfully not pay taxes. And then finally, they need to understand how money grows, how it accumulates, and even more importantly, how they lose it, particularly in retirement savings and a retirement accounts. So if once they understand how to accumulate cash, how to save and protect their cash, and grow cash is the first.
mhm, mhm. So on that topic of compound interest, what is an example? Because that is a concept that I really just in the last maybe 5 years um, grew to understand that concept, and I mean it's a remarkable concept. So can you explain a little bit about that and what type of vehicles helps to support that.
Yeah, so
That's
compound interest is we like to teach it in terms of the rule of 72.
Okay.
And pretty much what the rule of 72 is where you take the number 72 and you divide it by the rate of return. And that formula will tell you how many years it will take to double your money. So, hypothetically speaking, I believe many people bank with traditional banks or even credit unions, and they offer a savings yield of 0.01, 0.02. Maybe if you're lucky in banking with someone, you're probably getting 0.04 rate of return. So, for example, Shondell, like, let's just say if someone had an investment of like $10,000 and they put it somewhere where that was giving them a 4% rate of return, you would take 72 divided by 4, and that formula will tell you it's going to take their money 18 years to double. So if
Hmm.
you were to take that $10,000 with that 4% rate of return, in 18 years, the 10,000 grows to 20,000. In another 18 years, which would be 36 years, it would double into 40,000. Now, what we do as licensed financial professionals is we teach the strategies on how our clients can earn a high yield, a higher rate of return, and
Okay.
also allow them to become properly protected. We call that product the Index Universal Life Insurance Policy, and that is the strategy we use that can get them up to 13% rate of return on their money.
Got you. Got you. And so, I mean, I actually had that as one of my questions too. So, like, what actually is a IUL, or
an
am I
IUL.
am I?
An
Yeah. I'm sorry.
IUL is an Index Universal Life Policy.
Uh huh.
What index means, index, to make it clear, just means you can't lose. This
Hmm.
is a policy where it is it's indexed in three global markets: the S&P 500, the Hang, and the European market. So in other policies where they may be performing poorly, ours never performs. We have a 0.75% floor, which means when the market begins to drop, we're always earning no matter what the market drops to. But having a floor means when everyone else is earning zero, we're at least earning 0.75%.
Hmm.
The
I would even
strategy,
say, I'm
go
sorry, I
ahead.
would even say not even just zero. Sometimes the market goes into the negative, as we've seen in the 2008 housing crash, as well as with the pandemic. So while the market goes to negative to zero or the negatives, we have that floor of 0.75 for that guarantee. And our cap is 13%.
So okay, so no matter how the market is doing, you're still gonna either if you don't earn, you won't lose. So you may not
Absolutely.
earn, but you won't lose at it won't go below a certain amount.
Correct. See, let's break it down even further, Shondell. So,
Okay.
in speaking about the three rules of money, right? The first rule was compound interest. The second rule was how money grows. So, the IUL, like my mom said, we didn't even discuss that, but Beth is my mom. She brought me into this business and afforded me the opportunity to become an independent licensed professional. But the term indexed, right? Because we're talking about the indexed universal life policy. Index means that it's a combination of fixed and variable. So, for example, fixed is a fixed rate of return. This is like the 0.01 that we're seeing with the savings in our banks and credit unions, right? It's
Okay.
like our money is safe, but it's not growing. People are looking for ways to have their money grow. And I believe that's like a lot of the reasons why people go to a variable type of strategy, which includes like our stocks and mutual funds, right? Like it's growing, but your money isn't necessarily safe. So when the market goes up, you make money. When the market goes down, you're losing money. However,
Hmm.
with index, it's a combination of fixed and variable. So our money is safe and it grows. So when the market goes up, we make money up to that 13% cap. But when the market goes down or it drops, we have that floor of 0.75.
And it's funny. So I think I put the cart before the horse with this, because the first question that I really should have asked is, why is life insurance so important? Right? Because I didn't set that up, right. But since we got the money talk out the way, why is life insurance, besides being able to have money, when a person dies or whatnot, when we're talking about growing money or whatnot, we're talking about the business of, being our own bank. So
Hmm.
why is it's so important?
Mom, I'll answer part of this question and I'll leave the rest for you to answer. But like Shondell, we're living in times where people insure their cell phones and devices in their cars. But like when you talk about life insurance, God forbid, it's a morbid conversation. No one wants to have it. And nothing is certain in life except death and taxes. So why aren't
Hmm.
people being more proactive to insure their lives? Um, it's important because not only does it ensure the financial means for end of life or burial, but to be able to leave a legacy for your children or your loved ones, you know.
Hmm.
And I'll let my mom go into the living benefits aspect of it in terms of why it's so important, because life insurance is not just for when you die.
Hmm.
Yes. Um, I just, before I get into the living benefits, it is very unfortunate in what Darren said, because it hurts everyone when there's no coverage. Because I don't know about you, but I'm tired of seeing GoFundMe's every time
Hmm.
someone passes away. Everyone is financially stressed. The average person doesn't have $1,000 in their in their savings account. So
Yeah.
not being prepared is devastating for everyone. Life insurance policies, when we put together strategies, we're strategizing to pay off mortgages for the next 10, 20 years if that income earner supporting that family passes away. We're talking about homelessness now. Uh, it helps protect mortgage. We protect and calculate what the income is needed to sustain that family,
Hmm.
and then the ultimate burial. The average funeral costs between 12, sometimes $20,000.
Yeah.
Having security, it just brings peace of mind. Typically, when people purchase life insurance, they look at the cost and they want to keep it very low. And the average person gets a term life insurance policy. Well, what is
Hmm.
a term policy? It's basically like rental property, right? You're paying all this money, except you get absolutely nothing out of it. So, uh, the problem with term, I mean, it's okay to have if that's all you can afford. But the
Hmm.
problem is, if you have a term life insurance policy for 10, I mean for 20, maybe 30 years, in year 31 that policy is dead. You
Yeah.
have nothing. So if you have to have term with living benefits. A living benefit is, so a term doesn't have cash value, right? But you
Uh-huh.
do have a death benefit. What happens in that 20, 30 years if you're disabled? What happens if you become chronically ill, critically or terminally ill?
Yeah.
That term policy, then you would be able to accelerate the death benefit. And if you're terminally ill, if you have a $100,000 or whatever the value is, if you're terminally ill, you can cash out that full benefit and use it while you're still alive. If you have a critical illness, then it pays up to like 95%. So if you have $100,000 contract, then you're going to get $90,000 or 95 to be able to use and still leave a benefit for your loved ones. And critically, chronic illness, then you can accelerate, but just a smaller amount and leaving more of a death benefit. So term with living benefits, I mean, this is, life insurance, the term life insurance was changed because the thought of death insurance turned everybody off. But when you have a term with living benefit, it is truly life insurance because you can use it while you're still alive.
Hmm. Nice. Nice. Let me ask you something. Can life insurance be taxed?
Whoa. Yes
It
and
can.
no.
Yes and no.
Yes,
Okay.
no. So, yes, in terms of capital gains. So
Okay.
when we have an index universal life policy, there's called a 7-pay period. And that means how much, what it is it calculates how much you can actually contribute to your policy that'll allow capital gains that is below what the IRS stipulates in terms of capital gains and being taxed. So if you begin to contribute and overfund your policy, whereas your cash value is more than your death benefit, then that part that's over your death benefit can be taxed. Capital
Capital
gains
gains.
only.
Okay.
The death benefit and the death benefit, however, cannot be taxed. So when we
Mm.
start creating policies, we always set it under the modified endowment or under the amount that the IRS will allow, so it cannot be taxed. Now,
Mm.
the only time, now you can still overfund and have a modified endowment contract. If you never make withdrawals from that contract, they can't tax the gain.
What is that contract again? Say that again.
Called a modified endowment contract,
Okay.
and that's an IRS. That's an IRS law because if without that, we'd be able to make unlimited money and never be taxed. And you know the IRS is not having it,
No.
right? So
Yeah.
what's so beautiful about these contracts is that even if you do overfund, they're set up so we can set an IUL to be able to pay out on an annual basis whatever that the client wants. But once it gets to the point where it's taxable, they no longer pay it out. They take the funds and hide it in a death benefit. And therefore, from that, you can borrow. Loans can't be taxed.
Hmm.
So it
Now,
automatically will adjust the money into the death benefit where you can borrow from it. And that's really how you become your own bank.
so there's tons of people that will be watching this and that will definitely ask, um, when you use the words hide, a lot of times it throws up red flags in people's minds, right? So
Yes.
when you say hide, you mean hypothetically speaking, like you basically saying that your money is working for itself, right? So just clarify when
Well, when I
that
say
that
how, they transfer the cash value into
hmm
the death benefit because death benefits cannot be taxed.
okay.
Now, the insurance industry is highly regulated.
Hmm.
So there's no way that they would be able to do this within the confines of the law if it weren't legal.
Got you. So everything is ethical. I just wanted to make sure I clarified that because there will be some people who will pick apart this conversation and um there's always questions. There's always questions and in my community, I'll say my community, in my community, we're all skeptical. Depending on what household you come from, and you got to think about it. The majority of us did not come from a household where we had these money conversations. So our money scripts are a lot different. The conversations that we have around money and our ideologies around money is rooted in skepticism a lot of times, right? Only because it's not what we've been exposed to. So I just wanted to make sure that I broke it down into a conversation that we answer questions as we talk about them. So
Yeah,
um,
we've been taught to
very
save our money, and it's like we're not taught the proper way to save it. Um,
yeah.
no, these are the strategies that the top 1% of people are using. And while we've been taught to save, we've been taught to save for our future in 401ks or pensions and annuities or IRAs or IRAs. And typically that's not where we would like our money to go. Um,
Hmm.
because we call those, like, as referring to the third rule of money, um, how money gets taxed. Those specific vehicles are what we call our tax now families. So, Shondell, we have three tax buckets or tax families, if you will, and those include tax now, tax later, and tax free. And
Mm,
our tax nows like include our checking accounts, savings accounts, CDs, stocks, and mutual funds. Why? Because our money's taxed when we put it in and it's taxed when we take it out, right?
yeah.
And then like those tax later families, those are our 401ks, our IRAs, SEP IRAs, annuities, pensions, and then TSPs for our military families. And while the money is not taxed when we put it in, it's taxed when we need it the most, when we need, when we need those distributions. And I don't know about you, and I don't know about the people who will be chiming in, but I don't believe taxes are going to be what they are now or even lower 10, 20, 30 years from now. Like
No.
taxes are continuing to increase. So when you
Yeah.
look at those 401ks and all those retirement accounts, a lot of people still don't understand how those function. And I can guarantee you that when it's time for them to pull that distribution, the number that they see is not going to be the number they are going to receive. And
Mm,
then the third bucket is our tax free, which is like our Roth IRAs, our 529 college savings, long term care benefit, and then, of course, the cash value life insurance. And that's what we're speaking on today, the IUL, because it's so flexible for many uses. So, yes, it is life insurance, it's permanent protection with living benefits, but it's that cash value accumulation that is key.
And I
that's
also have
beautiful.
to add that our community concerns are very valid.
Hmm.
Historically, we have been sold policies that when it's time to cash in, they don't deliver. Let me give you an example. Um, I have a client uh, who had a client um, in a different capacity in terms of having assisted living homes and working in assisted living homes.
Okay.
Um, this client was in one of our assisted living homes because she was passing away soon. Young woman. She had two children. She insured her children and her aunt that she had life insurance. Y'all don't have to worry about a thing. I'm covered. You can cover the funeral. Y'all going to be set. You can take care of my babies. Everything is good. About 3 weeks later, she passed away. When they called the insurance company to cash in on that policy, she had an accident and she had an accident insurance policy. The only
Oh
way they
my.
could cash in, she died by accident. What happens in this industry is they put profits over people. You have many agents out there who are looking at only their bottom line.
Yeah.
This is why we educate first. We educate. We analyze policies. I just did an analysis for a client 2 days ago. Her policy was loaded with different oh my gosh, I have a loss of words.
Right.
Riders. She had so many different
Right.
riders.
Okay.
One, for instance, and each rider you get increases your cost of insurance.
Yeah.
But the more insurance you sell, the higher your commission. Keep this in mind. So when I analyzed her policy, first of all, she had a fertility rider, which if
Wow.
at any point in her life she wants to have extra children, but she can't,
Oh.
then rider would help her go get eggs and find a donor and go through that process of fertility. except her, she's in her mid-40s. Why
Yeah.
would a woman in her 40s who's got her whole life and a career want to have children? So I asked her, I said, do you have intentions of having more children? She said, no. I said, okay, why do you have a fertility rider? They had an Alzheimer's rider along with critical chronic and terminal illness. Those riders alone would cover Alzheimer's. Why does she have an additional Alzheimer's rider? We're
Wow.
loaded with riders. By the time I did the analysis, not only was I able to lower her cost of insurance, I also increased her cash value and included a long-term care rider, which means that if she's disabled, critical, chronic, terminal illness will pay out for her.
Hmm.
But long-term care covers the cost of the caregiver and all of the other needs that may be required as we age. So
Wow.
education is paramount because again, 91% of us have never had it. So to be able to empower them with this knowledge then gives them the ability to make the proper decision.
Mm-hmm. Mm-hmm. Let me ask you this.
Oh, go ahead.
So I'm sorry. No, you go ahead, Jaren. Go ahead.
I just wanted to throw in whole life too, because I know like there are a segment of people who believe buy term and invest the rest. Then you have people who are like, oh, whole life accumulates cash value too. What is this IUL? Like how we like to put it in terms, Shondell, is like whole life is permanent insurance, whereas term expires after a certain term, typically 10, 15, 30 years, right? And while whole life is permanent insurance, the cash value accumulation takes forever to grow. It's about that
Yeah.
second, it's about the compound interest, right?
Yep.
So I was helping a client, an older client actually, and she's like, I want you to look at my policy for me. I said, okay. I said, what type is it? She said, I don't know. I said, well, send me the paper we can figure out. So come to find out, it was a whole life policy, and the death benefit was only $10,000, and she was paying like $60 for it. She's had it for 4 years, and her cash value was only $300. So when I looked at that, I said, yeah, this is not where you want to be. Now, unfortunately, because of her medical background, she wasn't eligible for an IUL. So we don't just stop there. You know, if we aren't able to get our clients a preferred offer, we have over 72 A and A plus and A plus plus rated carriers that we work with. And for those people who don't know what that means, I'm going back to what my mom said about, people not understanding the type of policy they have, or even some of these insurance companies who aren't rated A plus and A plus plus, they don't have the capabilities or the cash reserves to pay out on their policies. So
Mm.
we only work with those carriers who have the cash reserves to pay out on their policies. Should everyone who has a policy with them need it, at the same time, they're able to pay out on all their policies. But what I did for my client was I was able to get her guaranteed insurability through Gerber, and she was able to have a premium of $96, but it increased her death benefit to $20,000. And she's turning 59 in a couple weeks, but she was just thrilled at the fact that she would be able to leave something behind for her adult son, because she's like $10,000 is not enough money. So
Yeah.
that to me counted as a win. But yeah, what were you gonna ask us?
Well, no, I'm glad that I didn't cut you off because that was I was gonna talk about the fact that it does take a while to accumulate money. That's funny that I mean it's almost like we was reading each other's mind, but you just summed it up because that was the question.
And the compound
I
interest,
was to, huh?
I was going to say how compound interest works against us in terms of loans and credit card debt, right? With those high APRs, it could work for us. Like, and this is why it's so important. Like, yes, we're talking about life insurance, but this is why the IUL is amazing for kids. Like Shondell, when I learned this information and I read this book called Life, Money, and Wealth Insurance, it changed my entire perspective. It was just like an aha moment. But like, I'm a mom. I live in Michigan. I'm married. We have 4 kids. And learning what I learned I wish I would have knew it earlier before my 16-year-old was 16. Like I wish I would have known when he was born, because while this cash value accumulation, like some people, like whole life, it does take forever. But with the IUL and the 13% cap, like whatever you're able to contribute, we can design the policy so that it doesn't take forever for the cash value to accumulate. So like
Mm.
we can set the death benefit for like 100,000 and then play with the illustrations to show you, like, for example, if a client was to say, well, I want my child to be able to have X amount of dollars for college education. Let's just say $150,000, $200,000 in college education. We can design that illustration to meet those financial goals, you know. And what's so amazing about the IUL, unlike a 529 college savings plan, because you got a lot of parents who are like, well, I'm saving money for my children in a bank or a credit union, again, low yield savings, or I'm putting it in a 529 so they can go to college. What happens if their child doesn't want to go to college, Shondell? What if they
Yeah.
decide they want to go to trade school or start a business or travel the world before they go to college, right? Or what happens if they have a 529, but the fine print says they have to attend a college within that state, but the child wants to go out of state? The IUL is so dope because it's super flexible. Like, unlike a 401k, right? Like the funds can be used for anything. They can be used to pay for these children's weddings, college education, help them buy a car, down payment on their first home, buy an apartment, start a business. It's just so empowering to know this is a strategy where you can save, and you can save strategically to where when they go to use that money, it's not going to be taxed.
Mm.
You
Mm.
know, when Jaron speaks of the children, here's the other thing why, and going back to your question, is why is insurance important? We all like to think that our babies are going to be perfect and grow up and have the proper behaviors, but that's not always the case. When children grow up and get in trouble with the law, certain behaviors will preclude them from having insurance. But
Yep.
when they have insurance policy in place, no matter what their behavior is, they're already covered. So that's vitally important, not only for their cash value in the future, but see, that's how you protect yourself and protect them as well. Because
Mm.
when that behavior leads to death, uh, you're covered.
Got you. Can you have more than one life insurance policy?
Absolutely, yes.
I
Um,
have three.
You got three?
we strategize when we do our strategies. We do this in we set them up first for the cash accumulation. Use that IUL for cash accumulation only. Then the IUL has the living benefits in it. But if you don't have to use it, don't. That's where
Mm.
that term with living benefits come in. Use
Okay.
that, not to lose anything, use it while you're still alive. And we always encourage all of our clients at minimum to have a final expense policy. That's just vitally important. Insurance policies, whole term, IUL, doesn't matter. Sometimes takes between 30 and 180 days to cash out. That doesn't stop the funeral directors from wanting their money. The cemetery is not going to bury you without any money. You got to
Mm-hmm.
have that casket and all of that. So you do have people who have passed away with living death benefits, but they're not accessible within the time frame that is needed to be able to cover the funeral expenses. So
Yeah.
what a final expense policy does is it cashes out within 24 to 48 hours of death without a death certificate. It comes with the concierge service. A lot of people in our family, we had one auntie that covered all their funeral arrangements. Auntie
Mm-hmm.
passed away. Now who's going
Mm.
to do that, right? So having this concierge is going to do a number of things. The first thing is upon death, you call the loved ones call the concierge. They work on the check right away. The next thing they do is handle all your funeral expenses. Funeral directors, again, want that bottom line. They're going to play on the emotions of the loved ones and convince them to buy the most expensive everything. Having that concierge, they are licensed funeral directors. So guess what? They're not going to allow it. They're going to negotiate the best price for you. They're going to then from everything for the funeral, whether it is the cremation, the burial, the casket, the flowers, the thank you notes, the announcements. They take care of everything and make sure that you have the absolute best price. And this is a guaranteed issue. It is though if some people, if they're already terminally ill, wheelchairs and things like that, then more than likely they won't be covered. However, for the broader population, you have between it's a small policy as little as $1 to $3 a day, and the benefit ranges between $5,000 and $50,000, no more than $50,000. So let's say you have a $50,000 final expense policy, then and the funeral is $1,000. $10,000 goes to the funeral to cover all the expenses. The rest goes to the family.
Got you. Got you. What is insurable interest?
Insurable interest. Jaren, do you want to? Or
I was just gonna. Well, no, I'll let you explain, and I'll give an example of it.
Okay. So insurable interest is basically if you have a financial obligation for someone, typically it's family. But if you are paying for the care or for someone else, then you have insurable interest. Okay. And that insurable interest gives you the power to have a life insurance policy on that person that you're taking care of.
Now,
I would like to second that, Shondell, though. It's not, you just don't even have to be taking care of that person. Insurable interest can be through the relationship. So if people have business and their business partners, they have an insurable interest together. Now, personally, in my life, like I shared, I have 4 children. 2 are with my husband, 2 are with prior partners. So with my 2 children who are not my husband's, I have life insurance policies on their fathers because of my insurable interest. We share a child in common. Yes, they're both paying child support, but what happens if something happens to them and they pass away? Then that financial assistance stops. And that's their obligation to, they agreed. I had the conversation with them like, hey, this is what I'm doing. I think we really need to get this coverage for you. Not only does it come with living benefits, because I got the living benefits for them too, in case they were to receive a chronic, critical, terminal illness, but ultimately, because no one can escape death when they pass away, our child now has something else to assist. So my children have their own IULs, but I also have policies on their fathers, which I intend to keep them as the beneficiary. So when they receive that tax-free death benefit, I'll let them use a portion, but the ideal is to do a lump sum into their IUL. And that's one thing we did not cover. I'm going to piggyback to that and then let you ask about the insurable interest. But the IUL is so flexible that you can pay the premiums in terms of monthly contributions, quarterly, semi-annually, annually. If people are looking to withdraw money from their 401k or any other venue or any other aspect and they've been saving, they can do a lump sum contribution and be done paying with it altogether. And then like, even if people were paying on their IULs for about 20 or 30 years and they decide not to, the cash value still accumulates and they still maintain their policy. So it's super flexible. Wow. And on the contrary, let's just say, like, for example, if someone was aggressively saving like $1,000 a month into their IUL, and if, they got into hard financial times where they weren't able to contribute that much, they can lower their premium to where it wouldn't be contributing to the cash value accumulation, but it would allow them to keep their permanent coverage. So, I mean, I look at it like the IUL is like a win-win. There's no way you can lose with it.
That's crazy. So what people don't understand about the insurance vehicle is insurance has been around since the beginning of time. I mean, when you think about it, insurance, kind of started when they were, using it to secure or secure their investments of cargo ships. Let's take it back that far, right? It's interesting what you said in terms of the insurable interest part about it doesn't necessarily have to be your kid or yourself or whatnot. It can be anybody who is in partnership with you in life, in business, or whatever. Something controversial that has been talked about in the last 6 months is some of the music artists, the record labels are putting insurance policies, and this was a rumor, but I believe it knowing about insurance, right? Or knowing what little I know about insurance. That makes sense.
Yeah, they
If
have
I'm
an
putting you on a contract for these millions, if anything happens to you, I need to make sure I'm able to recoup my money no matter what happens to you, right?
exactly.
And it
And
just so happens that there has been some things that has happened to some artists, some unexplainable things, which now makes sense as you think about the insurable interest term.
Yes,
yeah,
yes.
Wow.
That is,
it's
again,
to
that's
be,
so unfortunate because that's where the education comes in. I do encounter that, especially with younger clients, where, well, if I get this, somebody may kill me, right?
Man.
And they don't think about, though, in that loss, how the families will struggle. But
Yeah.
again, this is why we're educating families. Shondell, if we all had this knowledge in finance, and this knowledge, it's not just enough with the knowledge of finance. We also include personal and professional development because
Yeah.
we come into it. You when you get money, you really need to know how to respect it, respect yourself.
Yes, you
But
definitely do.
we educate families, and every day it's one family at a time. As we educate, those behaviors change. If we bring through true equality through this education, then we're also going to have equity. Because if we all have the same knowledge and we're all starting to grow money, respect it, and treat it a little differently, then there's no reason to kill one to get anything.
Hmm.
That's a problem.
not
We don't have the knowledge.
not only that, but like for those people who are concerned about like getting the proper protection and concerned about someone taking their life, we're not only just focused on the life insurance and proper protection. We have strategies for wealth accumulation and preservation too. So something that I'm working to implement for my family and our own policies is to create a trust. You make the trust the beneficiary. That way, no one human being person gets that money or they benefit from it, but the money goes to the trust. And with the insured as the God,
Beneficiary.
and it left. But the what is it called? The person who creates the trust.
Oh,
Trustee.
Yeah, as the trustee,
okay.
no, is it the guarantor? I'm talking about the person who creates the trust.
Oh,
Is it the guarantor? I can't remember right now. But the person
that's
who
good.
creates the trust, they regulate the stipulations on how that trust can be used, right? And you make the trust the beneficiary so that when something happens to you, the money goes into the trust and then it's dispersed however you want it to be used. So, I
Mm,
mean, people can let that be known or they can choose not to let it be known and people find out at the end, but by being able to put the funds into a trust, you're preserving the wealth of the family. Like this is how the Rockefellers were able to build their wealth versus the Vanderbilts. They didn't use this strategy through cash value life insurance. And like you're talking about insurable interest and record labels, this is what the banks have been doing for years. Like there was a popular reel a couple years ago where Soldier Boy was heated. He's like, I go to the bank to pull out my money and they telling me they ain't got my money. I got to wait X amount of days. That's because
mhm.
they took our money and invested it into a cash value life insurance policy and they need to wait the days for it to come back to them to give it to you. So if
Yep.
banks have been using this to make millions and billions and so have corporations and yes, record labels, why are we so skeptical to implement the same strategies for wealth generation and preservation and accumulation for our own families? Like when I learned
Right.
about this, I was like, oh, I'm going to create an irrevocable trust. And people are preaching now more than ever, generational wealth, and they don't really understand the proper way to go through it. I'm not knocking real
Yep.
estate. I'm a licensed realtor. I love real estate. I own my own house. I'm into it. Trust me, all the way. There's so many different ways to invest in real estate. But if you can use this IUL as a vehicle, we held a webinar in March, and we had someone present on real estate in the IUL. They shared that they have a client who's been accumulating wealth, and when they get ready to buy an investment property, they pull from their IUL and buy it. And when they get the capital gains, they dump it right back in and continue the same process. So
I've
this is,
heard that.
yes, it is amazing,
Mhm.
So, um, but yeah, like creating that trust and really being able to lay the ground rules for your family and saying, okay, all the life insurance money goes into this pool, talking about becoming our own bank. And now this is the
Mhm.
money we have to buy or build schools, to build the compound, to invest in real estate, to do whatever our hearts desire so that our family can continue the legacy. And
Yep.
it has to start with one person.
Nice. So I did a little fact check. So all trusts have a grantor, sometimes called a settler or truster. This
Mhm.
is the person who creates the trust, and it is the one who has legal capacity to transfer property held under the trust. So I
Yep.
just wanted to,
Thank
yeah.
you for that, because I
This
cannot
that's
remember
the
the.
beautiful part about this platform. But shout out to StreamYard. I need to get a check off of that.
But yes, the grantor, the person who starts and initiates the trust. Yep. And then you identify a trustee, the person who will manage it after you pass. And they still, that's the difference too. Let's cover irrevocable versus revocable. Irrevocable means it's irreversible. So whatever is set in stone, they got to follow it. So, like,
Mhm.
hypothetically speaking, what the Rothschilds did that I would love to implement into my family lineage is every baby that's born, you get a cash value life insurance policy on them, and the trust is the beneficiary. Juveniles are the easiest to insure. Granted, they don't have any health conditions
Yeah.
that they're born with. They get approved
Mhm.
easily. There's no medical record or medical history, so you can insure an infant and still be able to develop that pool of finances for your family. And then you have the rules on how the funds can be used. Now,
Mhm.
revocable means you can reverse it. You can change the rules and how it can be used and implemented.
Okay. So
We
you
that law.
want one of both. You want to
Yeah.
diversify that and have one of each, right? Or
It,
as a
it
equal mix.
well, it depends. It depends on the client and what they would like to accomplish. But we do work with net law for revocable trusts.
Okay.
We
Nice.
would say
So let me
revocable trusts are because you want to be able to change your mind. What's etched
yeah.
in stone, be the beneficiaries for future generations, funding those babies and their policies and making sure they're in place. But family falls out with each other sometimes.
Yeah.
Sometimes situations change, and you don't want people to have access to money who are living recklessly. So you want
No.
revocable so that you can be able to make changes. But whoever that grantor is who creates that trust, when they pass away, that trust then by law becomes revocable. I mean, they want revocable trust. I'm sorry, I said it backwards. When you want to make those changes, you want it to be revocable. But when that grantor passes away, that trust then becomes irrevocable.
Okay. So we're gonna wrap it up soon, but I got one last question. Now, you educate people on how to properly secure the bag, in that regards, in terms of being a policy holder, but you guys also educate people on how they can become certified and qualified licensed advisors as well, right? Can you all tell me a little bit about that part of the business?
Yes, educating families one at a time means because only 9% of us are licensed, we are severely underrepresented. So we
Hmm.
want to get the knowledge and power of licensure in the hands of everyone. So that process involves joining us as independent business owners in finance on a huge financial distribution platform that incorporates the licensing process. So to get licensed in finance, you must first be certified. So we take them through the course. And unless they want to be independent learners, I'm right there in the course with them. making sure that they know it. And once they know it and get certified, they can then take a state exam, pass the exam, and from that point forward, they are licensed in finance. $29.95, Shondell, to get this course to get licensed in finance versus $150,000 for a 4-year degree with compounding interest to win a job that they're not even degreed in.
Mm-hmm. Wow.
Finance is a $109 trillion industry. It generates the most millionaires in the shortest amount of time.
I just want to add to that too, because we are dealing with people's livelihood and their finances. We must be able to pass a background check, and dependent upon the state in which people get licensed, they may or may not have to get fingerprinted also.
Got you.
Yeah, that's really
And
important.
for the sake of, let me see if I can. I want to be able to add. I may have to put it in the show notes. Well, now let me see. Give me so would people go to justlovesuccess.com to get more information?
Yes, what I would like for them to do is it's a small form. They can complete the form, and Jaren or I will contact them.
Okay.
Whether they set up an appointment to have their policies analyzed, if they want a free financial analysis, if they want to become licensed in finance, we can help them every step of the way.
Awesome. Awesome.
Oh, and I just want
The
to add too, like what's really cool about this business. We have realtors on our team. We have people who are already in this industry and they decided to join our team. But unlike real estate, for those who aren't familiar, like you have to take each state's pre-licensure course and take
Yeah.
each state exam. Whereas with this business, you take the course once and the license once, and then you're able to apply for your license in any other state. There are no more exams. You take one exam and you are done. I thought that was mind blowing. I had a client. I wasn't licensed in Tennessee to begin with, and I processed an intake for a client. I applied for my Tennessee license and made a phone call to a system administrator, and I had my license in like 30 minutes. So like
Oh, wow.
it's amazing.
Nice.
Yeah, it's
That's
beautiful.
beautiful.
We can get licensed anywhere. I'm currently licensed in 5 states, and as my clients grow, I get licensed wherever they are.
Beautiful. 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 Ladies, I really appreciate you sharing this knowledge with us today. Um, you know, I can't talk about um, financial freedom. I can't talk about money enough. I can't talk about ways to save. I mean, I just can't talk about this stuff enough. I promise. I've had 3 different individuals. Well, now you all are the third conversations on the Headshot Happy Hour podcast in this regard. And the thing that I love is everybody has their own, lane, with educating people, with making money, whatnot, and those perspectives are so valuable, because everybody has a different delivery, everybody has a different approach, and everybody got a different reason to why they talk about it or why they're so passionate. So I appreciate you guys giving us your perspective. So
Thank you for having us.
is there any other way that people can contact you or reach out, or that
Um,
you would like them?
I'm on Instagram. If people are on social and they want to follow me, it's at Jaren Grows Money.
Okay.
And I'm Facebook and Instagram, Just Love Success.
All right. Oh no.
There's so much. The world of finance is huge, Shondell. There's so much more. People need to understand IRS codes and what that means, and with 401ks, and there's so much we can share. We have so much information to share.
Mm-hmm. Mm-hmm. And then Miss Beth, give me yours again one more time.
At Just Love Success.
Oh, okay.
And also Just Love Success on Facebook.
Awesome. Oh, it didn't give me both of them. Oh, here we go. No, it ain't giving it to me. That's rude. I want both of them on the screen. Here, so this is what I'll do. I'll keep it up there for a second.
Oh, it's
This
just
is
love success.
it's
It's one.
just
It's one S in the yeah.
oh okay,
LO.
just love. Okay,
Uh-huh.
hold on. Just love success. I got you. I got you. There we go. Nice. Well, I really appreciate you all. I'm a big supporter ever since I don't know which one of you reached out to me first, but I believe it was you, Jaren, and then I met Mom. So but the presentation that she gave me was on point. It was very relevant. So I will be a client soon. So like I have a term policy, and I think I explained that to you all before. And I'm probably like I think I'm like 8 years into a 15-year term.
Wow.
And I got it. You had mentioned before that people a lot of times buy insurance and they try to uh, keep it affordable, right? And that's where I was when I bought the policy. I was trying to keep it under a certain dollar amount. Initially, the gentleman that I was working with introduced me to a whole life, but at the time, the whole life just wasn't conducive to my budget. So I said, well, I want to have something, right? But now, like I say, I'm 7, 8 years into a 15-year term. It's time to start figuring out, what to do. I have an agent, and the crazy part about it is the gentleman that sold me the policy is no longer in the business. So
Mm.
that just went over, and somebody else reaped the benefits of that policy. But so he was a black man. He and I don't reap the benefits of it at all. Not well, me unless I die.
Oh, you
I
don't reap the
basically
benefits
rented.
of
I rented
your
this policy for the last 7, 8 years, right? And all that money could have been going towards building something. Even if I would have bought that whole life policy, probably wouldn't have been as beneficial to me as purchasing an IUL or buying into an IUL,
Yeah.
right?
not at
So,
all.
so now that you all have educated me on that, like that is so valuable. And it starts with a conversation. And I tell people all the time, people a lot of times when they're approached at at certain new opportunities, it's like, nah, I don't want to be a part of that, or no, I don't have the time, or I don't have the money. And you don't know if you have it until you have that conversation, because as you all stated today, there are certain strategies and certain methods that you can use to make it affordable for anybody, or make it where it is beneficial, so um yeah, I appreciate you all. So I just wanted to give you your flowers right now and let you know that what you have shared with me, and that now this conversation has been at least 3 different times now. The initial conversation, and then another conversation about setting up this podcast, and now actually being on the show. So yeah, I really appreciate it.
We appreciate you. Thank you for allowing us to share and educate on your platform.
Yep, no problem at all. So, yeah, this is the Headshot Happy Hour podcast. I'm your host, Shondell Thomas. Thank you for tuning in. If you have any questions about, let me stop. Get life insurance. If you don't have life insurance, get life insurance. We're tired of seeing people sell dinners. That's cool. We'll eat your food. We appreciate it. but you're scrapping and scrounging to bury your loved one during a time when you should be spending on actually grieving and just learning how to get over and navigate that tumultuous time. Talk to a licensed professional and consider it, because I mean, for what we spend on going out to eat, kicking it, drinking, smoking, whatever it is, we could spend money on something that can give back to us and give back to those that are here when we're not even here. So let's do that. It's the Headshot Happy Hour podcast. Do me a favor on YouTube, like, subscribe, share this, because this is a really important topic. We really appreciate you, and we'll see you on the next episode.